I know you're excited about Palantir for a whole host of reasons, but the question is it capable of making a profit? The stock has dropped some 64% in the last 12 months from its high of just over $34 per share to today, as of this taping, $12.35 per share. Can it ever be profitable, or is this another Uber story? Welcome to MG Investing. My name is Dee. This video is part 2 of a 4-part comprehensive stock analysis of Palantir using the dumb method to help you better distinguish between unicorns, thoroughbreds, and mules. The first video in this series covered the D and the dumb method, which discussed whether Palantir has a durable competitive advantage and why having one is important to your stock portfolio. You can find the link to the video in the description below. This video will address the U and the dumb method, which details the importance of understanding how a company makes money. The dumb method, if you've watched any of my other stock analysis, is an easy to replicate and reliable method for analyzing stocks without the need for sophisticated math, insane spreadsheet skills, or stock analyzing software. You know what? If you can read, you can analyze. I've used this method of stock analysis successfully for nearly 2 decades. Why? Because I'm a firm believer if you can't describe what you do as a process, well, you don't know what you're doing, and that certainly holds true for stock investing. Having a process is essential to long-term success in the stock market. It adds needed structure and consistency to the decision-making process. It neutralizes emotions and biases in the buying and selling decision that often cloud good judgment. Understanding how a company makes money helps us make more sense out of a company's financial reporting and forecasts, and discern the reality of a company's future revenues from the smoke and mirrors offered by analysts, eccentric CEOs, pump and dump schemers, and YouTubers pumping their video channel. The truth is, if you don't understand how the company makes money, do you really understand the business? My objective in this video is to answer 3 questions to better understand how Palantir makes money. Number 1, how do they make money, and is it easy to understand? Number 2, how much money do they make? And number 3, what is the company's prospects for profitability? Let's address the first question. How do they make money? Palantir earns revenue through the sale of subscription services that provide its clients access to its various software platforms and accompanying operational maintenance services. The Palantir cloud subscriptions give customers access to the software functionality in a hosted environment controlled by Palantir and is bundled with stand-ready operations and maintenance services. Now, this revenue is recognized over the contract term on a ratable basis. These cloud subscriptions provide access to Gotham, Foundry, or Apollo. Revenue is also generated by sales of Palantir's on-premise software subscriptions, which give customers access to use of functional intellectual property either on their internal hardware infrastructure or their own cloud instance. On-premise is also sold with stand-ready operation and management services. Revenue from on-premise sales is also recognized over the contract term on a ratable basis. Another revenue source is from the bundling of professional services designed to support the customer use of the software over the contract term. Now let's address the second question. How much money do they make? The most useful tools for this will be the most recent annual report, also known as a 10K, or quarterly report such as a 10Q. Don't let the thoughts of reviewing these reports scare you. They're not that difficult to read if you know what you're looking for. Let's take a look at the most recent 10Q to review the company's performance over the comparable quarter last year. Here I'm looking for things that stick out from the normal to substantiate the story the company is telling me about why it did or didn't make money. On the condensed consolidated balance sheet, I'm comparing 9 months over the period September 30th, 2021 to December 31st, 2020. Here I'm just taking a quick look at the balance between total current assets and liabilities to get a general sense of the financial health of the business. Looked like there's been a significant growth in the total assets from $2.6 billion to $3.2 billion, and total liabilities have decreased from $1.1 billion to around $976 million. It's always good to have significant cash to cover liabilities. Moving down to the statement of operations and comparing Q3 2021 to Q3 2020, I see revenues are up 32% to $392 million in 2021 versus $298 million over the same period last year. Gross profit is also up $305 million versus $140 million the same period last year, which is a good sign. Scrolling down to net loss, it shrunk in Q3 2021. We see a net loss of $102 million versus $853 million in Q3 2020. A nice improvement as the company moves towards profitability. A few points of interest I want to point out very quickly, 2 of which speak to the level of clientele that Palantir is actually selling to. The first one is under accounts receivable and allowances. For credit losses, they didn't have any. And under concentrations of credit risk and other concentrations, they mentioned they didn't experience any significant losses on its accounts receivable. Again, this speaks to the size and quality of the clients that they're working with. Another key point is that no customer represented more than 10% of total revenue. This is good to know because the company's revenue can't be held ransom by one single customer, which also gives Palantir a little more leverage in their pricing of their products and services. Here's another little caveat you should know about. I've already explained that revenue is generated through selling subscription access to Palantir's platform. These subscriptions are done on a contractual term that may extend from 3 to 10 years, and therefore all the revenue isn't immediately recognized nor guaranteed, which leaves performance obligations that remain. This is the time under the contractual term that is not yet used, therefore no payment has been made and all services have not been delivered yet. At least not all the payments have been made. I've made a slight mention of this in the first video, part 1 of this 4-part Palantir comprehensive stock analysis. If you haven't watched that video, I'd highly recommend that you go back and you watch it so you have a better sense of how the stock analysis process of the dumb method comes together. It mentions here the company generally allows its customers to terminate contracts for convenience prior to the end of the stated term with less than 12 months notice. So just because a contract was signed for $105 million or whatever, it doesn't mean all the revenue is guaranteed. Scrolling down some more under investments, it's interesting to find some very creative potential revenue sources derived from investment agreements where essentially Palantir provides products and services to a company in exchange for buying shares of those particular companies. This was a little new to me, so it kind of took me a minute to comprehend exactly what was going on. Here's a look at those companies where they actually bought shares. Most people have never even heard of these companies. Companies like Celerity, which is a biocell engineering company, Faraday Future, EV cars, which some have heard of. They've been handicapped by fits and starts with changes with its CEOs. Astrocast, they build global nanosite IoT networks. Their goal is to have 100 nano satellites spanning the globe for low latency transmission by 2024. Then there's Lilium, the EV jet, Black Sky, an analytics platform from satellite data constellation, persistent global monitoring satellites and satellite data. Roivant Sciences, a platform for founding and funding innovative digital health businesses. And there's some other ones here listed. I'm not going to go through all these as you scroll down through page 17. Scrolling down and looking at revenue, I see that total revenue was up 36% at $392 million as compared to $289 million last year, a good trend. Revenue is segmented into 2 categories, government and commercial. Government showed a nice increase at $217 million versus $162 million in the same period, Q3 2020, which is a 34% increase. In the commercial segment, although slightly smaller in revenue, showed the highest percentage of increase of 37% at $174 million versus $126 million Q3 2020. So they are gaining some positive traction in the commercial market for their products and services, a trend I suspect will get bigger as the company remains focused on its acquire, expand, and scale plan that I mentioned in part 1 of this video series. When looking at revenue by geographic segment, $227 million or 58% of the company's revenue comes from the US. United Kingdom representing 12% of revenue at $47 million and 30% of revenue coming from the rest of the world. No other single country represents 10% or more of total revenue over these measured quarters. And the final question is, what is the company's prospects for profitability? It's highly probable that Palantir is profitable Q2 of Q3 of this year, but even at that, I see them doing just as Amazon did when it began to be profitable. It will just reinvest the money back into the business, so it may not actually look profitable for at least some time. There's no question Palantir will be profitable. How profitable? Only time will tell. Some people think that it's limited in its capacity to grow within the government sector, and yes, there's limits, but that limit is much bigger than many analysts believe it to be due to the wide application of not only Gotham, but Foundry within the various governments allied to the US. When you understand Palantir's plan of acquire, expand, and scale within each organization. Once this thing gets within an organization, it expands and it gets entrenched. In summary, I found it easy to understand how they made money, and I like the trend in revenue growth. I certainly see prospects for greater future profitability as more companies and countries become more reliant on its platforms of Gotham, Foundry, and Apollo, as it looks to become the default platform for critical data analysis and integration. I give Palantir an understanding score of 7 out of 10. I don't know. What are your thoughts? What do you think are Palantir's revenue limitations? Do you think there's enough enough clients to support its market cap? Love to hear your comments. I'll be live in the comments below for the first hour of the release of this video, responding to comments. And so I'd love to hear from all of you out there. The next video, part 3 of this 4-part Palantir comprehensive stock analysis using the dumb method, will explore the first M, or M1, in the dumb method, which represents management, which is about measuring management effectiveness. That's management's ability to translate their vision of the company into a viable and profitable company. If you found value in this video, click that thumbs up and subscribe so you can be the first to be notified of the release of part 3 of this 4-part Palantir comprehensive stock analysis, the most comprehensive stock analysis of Palantir on YouTube. We'll catch you in the next video in this series.